In this video, we're going to look at Marietta Materials. MLM is the ticker symbol on the NYSE. And we can see a nice uptrend going on here since about mid-2023. We have a nice strong rise followed by these pullbacks, nice strong rise, and we're kind of in this pullback very similar to this one, especially if we kind of put it on a log scale, which just makes all the percentages on the chart the same. So move from $1 to $2 is the same as a move from $100 to $200 because those are the same percentage movements. Whereas if we take out the log scale, then obviously as the stock gets higher, dollar moves get bigger, but the percentage movements don't. So I do like to look at both logarithmic and algorithmic charts, but I'll often use logarithmic more. And yeah, that just breaks it down to make everything percentages look similar. And yeah, this decline looking very similar to this one. So we may have a little bit more to go, I don't know. But it is looking interesting from a fundamental perspective and this technical perspective. Buying on these as we start moving up off these lows, there is the potential to catch, the bigger up wave that could be forthcoming. So let's look at why it's interesting though fundamentally. And so I got some other stocks here, but we're mostly focused on MLM. And yeah, so 12%, this is the growth estimate for EPS yearly. So it's a 5-year growth estimate per year, 12.1% EPS growth expected. That's better than the median expected growth rate for S&P 500 stocks is 9.4%. So this is quite a bit higher than that. And when we have growing earnings, that generally equates to better stock performance. And that has happened in MLM over the last 10 years. The average yearly return, or the average annualized return, is 16.9%. So that means the stock has made 16.9% per year over the last decade. And the S&P 500 is about 4% less than that, close to about 13%. So that has translated, and you can see earnings have grown in the past. 33.7% is how much earnings have grown over the last 5 years. That's per year. So strong earnings growth has contributed to better stock performance. And while future growth is expected, the company does have a pretty good track record of beating analyst expectations. Out of the last 14 I looked at, they beat on 11. So this could end up being higher, right? Like this is what analysts are projecting, but the company does have a track record of beating analyst expectations. So that growth rate could end up being higher, and that could contribute to better stock performance going forward. Okay, so that's all well and good. The company is growing, but what's interesting and what caught my eye is this showed up on one of my scan lists of just companies that are solid. And then I was flipping through them and also noticed that it's trading at one of its lowest PEs in the last, since 2011. Current PE is 16.8, if I recall. Should be on here somewhere. Yeah, PE 16.8, and yeah, we don't see that very often for this company. As you can see, near one of the lowest values over here, we got down into that 16 area during COVID. That was a pretty good time to buy. And then also this area here back in, that would have been 2018, we also got down into the 16, 17, 15 area where we are now. That also ended up being a pretty good time to buy. So presenting a potential value as well as growing. What I also like to look at is just, how is the company doing overall, and we can see its sales each year, and they just go up, go up, go up, go up. One little hiccup there in 2020 when COVID hit, but other than that, pretty much increasing revenues every single year. And if we go to EPS, also, for the most part, there's some movement. Some years we might have a really good year but then drop off a little bit. But if we look at this kind of overall trend, just really moving up and in a nice direction, and that's projected to continue with 2024 moving up into the $22 EPS range for the year, and then for 2025 getting up into that $25 area. And so that just continues that growth, and then we'd expect that to continue over the next few years. So good value, good growth. Technically, we have that pullback going on and the price just starting to move up. So it's an interesting stock. Of course, there are always risks. This stock could just start trading at a lower PE, and maybe it just stays around the $20. In that case, we might get a bit of growth just due to the earnings. But it's nice when you have the combination of being able to buy it at a decent price as well as having the earnings growth. We could also get a big market sell-off. When the major indexes decline, they take most stocks with them. So even though the outlook for a company may look good, the stock price still could decline if the indices fall. So always consider your own risk tolerance, how you want to play the trade, and also consider your position sizing before investing. So just an idea that happened to come up on one of my lists, and you can check it out for yourself and do your own due diligence.